SK Bajpai, Senior VP Finance and Legal, CFO at GSFC, joins in right now to talk about the numbers and the outlook ahead. Did the quarter shape up as per your estimates, Mr. Bajpai, or would you have hoped for more? And are there any implications of either some carry forward deals or some delays which may rub off on Q4 numbers?
No, the quarter went well, as stated that the company delivered a strong financial and operational performance, demonstrating robust growth across key metrics. If we see sales, this is 5% higher to 2814 crores in Q3. Also for the 9-month period, if you see that it is 9% higher than previous 9 months, that is 8,313. PBT also rose by 9% in Q3 and 19% in 9 months. If we see PAT is increased by 18% in Q3 and 20% in 9 months. So that is a good set of number. However, for the coming quarter, Q4, it is not a seasonal business for the fertilizer industry. So we cannot expect much from the Q4, but still we are trying. A lot of developments at the geopolitical situation is there. Government of India has already entered into the agreement with the European Union, FTAs with the European Union and USA. So there will be good chances for the export of melamine, caprolactam, and HX crystal product of the GSFC. So that will boost the performance of IP sector in Q4.
So, Mr. Bajpai, just to understand, do you see raw material costs going up even further? How does that impact your Q4 and the full year?
Yeah, raw material prices like phosphoric acid is up by 34%, sulfur is very high, 130% up, and sulfuric acid 91% up. But we have the long-term agreements as far as sulfuric acid is concerned, and we have also capitalized our sulfuric acid 5 project at GSFC Baroda Fertilizer Nagar unit. So that will boost the production of ammonium sulfate and ammonium phosphate sulfate, and sulfuric acid will be available for these products at an appropriate price because it is our own production. So it will not impact much as far as the Q4 and the whole year is concerned.
You talked briefly about the EU FTA and how it would help. Can you be more specific on this? Of all the FTAs that we've signed, does this help you with, better kind of opportunities? Where exactly does this boost for you?
Yeah, actually, FTA signed with the European Union, where there are material like melamine and caprolactam is exported to the European countries. If this tax tariff is not there, then it will impact around $60 per metric ton as far as melamine is concerned. So, and it will be a good realization in the export market. We have also taken up the matter with the Indian government that there should be some relief as far as our own industrial development in the country is concerned, like Atmanirbhar Bharat, because we are only the manufacturer of melamine in the country, but we are exporting because of not the good realization in domestic market.
Okay, so therefore let me double down on that, Mr. Bajpai and Alex here. I want to ask about melamine exports and higher traded ammonia as well. So, but specifically on melamine exports, if things go along the lines that you're hoping, and we're expecting that this EU deal will be signed and will take effect later this year. So what is your anticipation of FY27? Do you have a hopeful target with regard to export share for melamine?
Yeah, certainly. Because if we see in the Q3, we have boosted our export a lot in the melamine is concerned. And further in the, as soon as the notification is announced and we are getting that benefit, for the next financial year, as you rightly said, will be good for us as far as export of melamine and other products like caprolactam and HX crystal that is concerned, because we are only the manufacturer in India, and if the foreign market is available and good realization is there, it will certainly boost the profitability of the industrial product segment of the company.
That is 1 + 1 = 2. What I'm actually looking for is how much does it go up by? What would be the ideal ratio for you for melamine exports as a percentage of the total, and what are the implications of that on the bottom line?
So actually, if we see that nearly 10 to 15% additional revenue we are generating while exporting the melamine to the export market, so we can expect at least 3 to 4% jump in the bottom line. Because main focus, the main revenue source is the fertilizer. So industrial product segment only share the 25 to 28% in the total revenue. So melamine as per se in the total revenue will be a very limited uh, role to play.
So specifically, with regard to inventory management as well, I'm wondering, Mr. Bajpai, how are you calibrating heading into Kharif, and what is your channel inventory position right now?
So inventories are well placed in the market. As far as DAP is concerned, DAP is good in the channel, and urea is also available. We are also getting the shipments from the uh, importing the urea and placing it in the market for the next season. So there is no problem as far as the fertilizer availability to the farmer is concerned in the next season.
Mr. Bajpai, a nearly 200 KTPA sulfuric acid plant, I believe, was commissioned in January. So do we see the benefits of it play out in Q4? Part one is that. And part two, your presentation says that there are ongoing projects, a 1200 MTPD train modification APS unit at Sikka unit, etc. When do these come on stream? Do they have an impact on FY27 numbers, or are these beyond that?
No, as you rightly said, sulfuric acid plant is already commissioned and is working at very well at more than 100% capacity. And you know, sulfuric acid price is very high in the market. So it is good that we are producing our own sulfuric acid from the sulfur taken from the Reliance and Naira and other nearby refineries. So sulfuric acid price is in control, and it will boost the production of ammonium phosphate sulfate and ammonium sulfate. So ammonium phosphate sulfate is the product which gives the better remuneration and better margin, and that is the highest production and record production of APS we have done in the Q3. So it will further boost the production and the margin of the product after commissioning of sulfuric acid 5 plant.
On that, therefore, the run rate seems to be that your March numbers or the Jan-Feb March quarter numbers, the EBITDA numbers don't look very good usually, right? 24 was a bad number, 25 was a bad number. FY26, because of this plant itself, does it shore up your EBITDA numbers in Q4?
Yeah, it will certainly make this number better in comparison to the past year, because sulfuric acid prices are just now more than 17,000 rupees per metric ton in the Indian market. So it will certainly help in the reduction of the cost as far as APS is concerned and ammonium sulfate production is concerned. And the next full year, if you see that the sulfuric acid plant will be a boon for the company, and if you see the full year, it will give a lot of cost reduction as far as sulfuric acid prices is concerned, because as you know, the certain Asian countries has banned the export of the sulfuric acid to other countries. So that is the reason the sulfuric acid prices are very higher in India. So sulfuric acid 5 plant capitalization at right time for the GSFC will certainly boost the top line and bottom line.
Great for you, and therefore, Mr. Bajpai, I would love for you to give me 2 points of guidance if you can. One, what is the revenue run rate that you expect, let's say, for FY27, based on what you are doing thus far in FY26? Because we are almost mid-Feb, you would have a fair idea of what you would do in FY26. So what's the kind of growth that you envisage there? And two, more importantly, if indeed you get the benefits of this sulfuric acid plant for the whole year of FY27, what is the likely EBITDA margin performance that you can clock in for FY27 as a year?
One more product we are capitalizing in our Sikka plant, that DAP train we are converting into the APS production, and that facility will be available in the coming September or October. So that will boost the production of ammonium phosphate sulfate, which is the star product and as far as fertilizer is concerned for the company. So that will again make our top line better, and the bottom line also. So in the next year, if you see that at least 10% boost in the top line we expect, and the as far as EBITDA margin is concerned, we expect around 8% EBITDA margin in the coming financial year.
Okay, so 10% top line growth, EBITDA margins likely to improve from about to 8% from about 7% in FY25. Interesting. Okay, Mr. Bajpai, we'll leave it at that. Thank you so much for taking the time out and being with us. All the best for the quarters ahead.
Thank you. Thank you, sir.